The stock of SOFI is a roller coaster, and anyone riding it better be prepared for some stomach-churning twists. Let's dissect the patterns here. After earnings reports, it's like a predictable dance, a 20% jump that's quickly followed by a nosedive. July 2023, a triple beat, big red candle. May 2023, deja vu. January 2023, huge beat, big green candle, but the gains slipped away like sand through fingers. Now, let's talk sentiment. Truist labels it a battleground. Bulls praising its transformative offerings, while bears dismiss it as a glorified bank. Mixed opinions from analysts too. Miswa goes bullish, slaps a buy rating, and sets a $12 target. On the other hand, Wetbush is a Debbie Downer, with a conservative $3 target, muttering about capital constraints. Who do you trust? Well, not so fast. The speaker in this narrative believes in SOFI's management, swearing by their flawless execution and track record of conservative guidance. Analysts? Not so much. Long-term projections are thrown into the mix. SOFI's management, apparently the oracle here, predicts 20 to 25% compound annual revenue growth beyond 2026. Bold, considering it hinges on no major macro changes or business launches. That's like predicting a sunny day without knowing if it's going to rain or snow. Analyst disagreements add a layer of complexity. KBW dons the pessimist hat, slaps an underperform label with a $6.50 price target, fretting about stock volatility becoming the norm. Oppenheimer, the optimist in the corner, acknowledges fair value accounting differences but is all smiles about SOFI's approach. Financial metrics time. The risk-based capital ratio is on the upswing, exceeding regulatory minimums. Convertible bonds repurchased, warehouse credit usage cut, a balance sheet on a diet, getting stronger. But is that enough to calm the market's nerves? SOFI Money and the financial services segment throw in some impressive figures. A 64% YOY growth in SOFI Money customers and a whopping 119% YOY growth in financial services revenue. But, and there's always a but, intentional losses are incurred for new credit cards and investment products, contributing to an 18% profit contribution. Are these losses strategic moves or red flags? Tech platform growth, a beacon of hope, accelerates from 6% YOY to a jaw-dropping 133% YOY. The anticipation for a stellar 2024 across traditional banks, non-financial institutions, and the federal government, quite the ambitious plan. EPS growth expectations add another layer to this stock saga. Analysts, with their crystal balls, foresee a 148.5% YOY growth for fiscal 2025 and a more modest 41.18% YOY growth for fiscal 2026. The market cap stands at $7.64 billion with a forward PE of 57.3 times, factoring in these optimistic projections. Is the market pricing in growth or overhyping a stock with a penchant for wild swings? Now, let's talk about fair value accounting concerns. Oppenheimer brushes them off, standing firmly behind SOFI's approach. But in a world where accounting scandals are more common than rainy days, can we really take that at face value? In conclusion, this narrative acknowledges the frustration, the market not reflecting the business growth. It's a conundrum, a puzzle, a maddening dance. Yet, in the chaos lies opportunity, or so the speaker claims. Accumulate shares while the stock remains stable, they say. But is it stability or just the calm before the storm? Only time will tell. Investing in SOFI is like navigating through a dense fog. You see glimpses of promise, hear conflicting opinions, and are left to decide whether to stay the course or bail out before the storm hits. It's a risky game, and while the management's track record and growth projections paint a rosy picture, the market's reactions after earnings reports and the mixed bag of analyst sentiments introduce a hefty dose of skepticism. The monologue attempts to unravel the complexity surrounding SOFI, laying bare the contrasting narratives that make it both enticing and unnerving. It's a call to action, an invitation to tread carefully in the turbulent waters of SOFI's stock, where potential rewards are high, but the risks are equally daunting. Whether you choose to dive in head first or observe from a safe distance, one thing is certain: SOFI is a stock that keeps everyone on their toes, for better or for worse. Please go ahead liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.